Do not start trading stocks, forex or crypto until you've watched this series of short videos. This series of 7 videos contains the only information needed to trade properly. Whether you understand technical analysis or not, you'll find this very useful. And this is especially useful for swing trading and medium-term investing. The goal of this is that you'll trade without getting stressed, since you'll actually understand why you do what you do, and not just follow some random entries and exits blindly. So let's get started. The first step you need to take is decide on the security or the market that you'll be trading. I've explained how to do this in previous videos, but simply just choose a market that you're convinced that will do well over the coming 10 to 20 years, even if you're going to trade short term. For this series here, I'm going to use the S&P 500 as my chosen market, as I'm convinced that the top 500 listed companies in the US will generally do well for the foreseeable future. Now, we need to start looking at the chart, and I'll be using TradingViews for illustration, as you can use it for free if you choose to. I'll use the weekly chart and we'll have normal candles on there. What appears at the bottom of this chart here is the volume, but we won't use it now, so you can choose to take it out if you want to. Now, let's start putting some indicators on this chart. The first indicator I put on is the 5-year exponential moving average. On the weekly chart, this is the 260, which represents the average price over 260 weeks or 5 years. Simply put, this is the level where the price on average trades close to every 5 years. In a bull market, it will be sloping upwards, which means that it tries to catch up with the current price. Next, I put the EMAs for 3 years or 156 weeks, 2 years or 104 weeks, 1 year or 52 weeks, 6 months or 26 weeks, and an optional 3 months or 13 weeks, which we'll use later on in some exit strategies. Now that we understand what the lines on the chart means, we move on to timing our entries in the next video.